Welcome to your earnings outlook for October 28th.
Yeah.
This week is absolutely jam-packed
Yes.
with major companies reporting, and you know what that means.
Hey.
Big potential for some market shakeups. So we've done the prep work
Right.
and curated the most interesting reports to watch just for you.
Oh, good.
Get ready to deep dive.
That's right. We're not just talking about any companies here. We're talking about the heavy hitters.
Right.
Like Ford, Alphabet, Amazon, Apple.
Yes.
The kind of names that can really move the needle.
Exactly. And to help us break it all down, I've got our market guru here ready to share their expert insights.
Absolutely.
So are you ready to navigate this earnings roller coaster?
I am.
Let's start with Monday, October 28th. Ford, ticker symbol F, is taking center stage.
What's fascinating here is that Jim Cramer, he's really hammering on this idea that Ford needs a clean quarter.
Oh.
By that, he means no nasty surprises like major warranty issues or a bigger than expected loss from their electric vehicle division.
Now, that's a tall order, wouldn't you say? The EV market is super competitive right now.
Yes.
And Ford's been facing some headwinds. I mean, think about all the adjustments they've poured into EVs, plus the pressure to keep up with Tesla and all the other players.
You're spot on. And here's where it gets even more interesting.
Oh.
Cramer is echoing some whispers from other analysts about potential losses in Ford's EV ventures.
Interesting.
So if I were you, I'd be watching closely to see how their EV sales are doing and what they're saying about profitability.
Okay, so Monday is all about Ford and whether they can deliver that clean quarter Cramer's hoping for. Now, Tuesday, October 29th, we've got two major tech players stepping up to the earnings plate. Alphabet, Google's parent company, ticker symbol GOEL, and AMD, the chip maker, symbol AMD. Where do we even begin with these two?
Well, with Alphabet, Kevin McCormick, another sharp analyst, is predicting that the demand for Google Cloud will actually outstrip their current capacity.
Wow.
If that's true, it could mean a positive surprise for their earnings.
That's definitely a bullish take. But when it comes to AMD, McCormick is singing a different tune. He thinks trying to trade AMD earnings right now is just too risky.
Yeah, and here's why. The semiconductor sector is notoriously volatile. It's like trying to predict the weather in a hurricane.
Oh, I see.
McCormick actually suggests looking at other AI infrastructure companies instead. Think NVIDIA, ticker symbol NVDA, Coherent, symbol Eatliok, Marvell, symbol MRVL, and Broadcom, symbol AVGO. They're all riding the AI wave, but maybe with a bit less volatility than AMD.
So maybe diversify a bit rather than going all in on AMD. Good advice. Now, Tuesday also brings us the golden arches. McDonald's, ticker symbol MCD. They've been dealing with that unfortunate E. coli outbreak recently, and it's bound to come up in their earnings call.
Absolutely. The market will want to know how the outbreak is impacting their sales and what steps they're taking to regain consumer confidence. This is a classic case of how real-world events can directly affect a company's bottom line.
But, despite the setback, Cramer is surprisingly optimistic about McDonald's long-term prospects. He's pointing to the success of their $5 meal deal as a sign that they're still resonating with customers, especially in a tougher economic environment.
Right, and McDonald's has a history of resilience. They've weathered storms before, and this E. coli situation, while serious, is likely to be a temporary blip on their radar.
Okay, we've got Ford, Alphabet, AMD, and McDonald's all reporting on Monday and Tuesday. It's already shaping up to be a busy week, but wait, there's more. Wednesday, October 30th, brings us another trio of heavy hitters. Eli Lilly, symbol LLY, Meta, symbol Meta, and Microsoft, symbol MSFT. Ready to dive in?
Let's do it.
Okay.
Starting with Eli Lilly, McCormick is pretty bullish on them. He thinks the strong sales of their GLP-1 drugs, which are used to treat diabetes and obesity, could push the stock even higher.
And here's a fun fact. Jim Cramer's also a big fan of Eli Lilly, calling it one of his top picks.
Oh, wow.
So we've got two heavyweight analysts singing the same tune here.
Now, with Meta, it's a bit more nuanced. McCormick is expecting them to beat earnings estimates. However, he cautions that how the stock actually performs will depend a lot on their forecast for the future and any announcements about increasing their capital expenses for AI development.
Makes sense. Investors are always looking ahead, trying to anticipate future growth and profitability. And Meta's been pouring tons of money into AI, so any updates on that front will be closely scrutinized.
Right. And then we have Microsoft, the granddaddy of tech. McCormick's predicting they'll beat both earnings and revenue estimates. But again, their forecast and updates on capital expenses related to their AI cloud infrastructure will be key, especially considering Microsoft stock has been a bit sluggish for the past 3 months.
So their earnings report could be a turning point for better or worse.
Exactly. This is where things get really interesting because we'll see how their cloud business is stacking up against Google's. Remember, McCormick's predicting that Google Cloud demand will exceed capacity, so Microsoft's performance will give us another data point to assess the overall cloud market.
Okay, so Wednesday is shaping up to be a tech showdown with Eli Lilly, Meta, and Microsoft all reporting. We've got drug innovation, the metaverse, and the cloud all vying for attention. But hold on to your hats because Thursday, October 31st, Halloween, could be a real treat. Our trick. For investors with earnings from Amazon, symbol AMZN, and Apple, symbol AAPL. What spooky predictions do you have for us?
Well, when it comes to Amazon, McCormick thinks the details about cloud sales that will be revealed in Google and Microsoft's earnings earlier in the week will actually influence how Amazon's stock trades before their own report even comes out.
So we might see some pre-Halloween jitters or excitement depending on how Google and Microsoft perform. It's like the market's trying to predict the ending of a horror movie before it even happens.
You got it. And then, of course, we have Apple, the tech giant that everyone loves to follow. The big question is whether they'll deliver a Halloween scare to the market.
Ooh, scary. I'm on the edge of my seat.
Now, while their actual earnings report is expected to be positive, there's a chance their forecast for future earnings might disappoint due to those reports of slowing iPhone sales.
Which wouldn't be surprising given the current economic climate. People are being more cautious with their spending, especially on big-ticket items like smartphones.
Exactly. But remember, Jim Cramer's famous advice when it comes to Apple: own it, don't trade it.
He's all about that long-term perspective. Don't get spooked by short-term fluctuations. Focus on Apple's overall strength and track record.
That's exactly right.
Yeah.
It's easy to get caught up in the day-to-day drama of earnings season, but sometimes it's best to zoom out and look at the bigger picture.
All right, so we've covered Monday through Thursday, and let me tell you, it's already a wild ride.
It's like we're on a financial roller coaster, isn't it? Up and down, twists and turns, but remember, just like on a real roller coaster,
I know.
you've got to keep your eyes on the horizon and enjoy the ride.
I love that analogy.
Yeah.
And speaking of horizons, let's not forget about the bigger forces at play here, the macroeconomic trends that can influence not just these individual companies, but the entire market.
Yeah.
Think interest rates, inflation, consumer confidence. They're all part of the bigger picture.
Right. It's like trying to predict the weather. You can obsess over individual clouds all you want, but if you don't understand the larger weather patterns, you're going to get caught in the rain.
Exactly. And right now, one of the biggest weather patterns we're watching is the whole debate about whether the Fed will raise interest rates again in November.
That's the million-dollar question, isn't it? The Fed's walking this tightrope, trying to cool down inflation without sending the economy into a recession.
It's a delicate balancing act for sure. And to add to the intrigue, Friday's non-farm payroll report is going to be crucial in their decision-making. If employment stays strong, it could signal that the economy can handle another rate hike.
Exactly. So we've got economic data points interwoven with all these company-specific earnings. It's a complex web, no doubt.
Right.
But that's what makes it so exciting, right? We're like detectives piecing together all these clues to get a clearer picture of what's going on.
And to make things even more interesting, we've got some politically charged companies reporting this week too. Meta, for example, is always in the headlines for one reason or another. But remember, our goal here is to stay objective and focus on the financial implications of their performance.
Absolutely. We're not here to take sides or get into political debates. We're here to help you understand the potential impact on your investments.
Exactly. And speaking of impact, let's circle back to some of the individual companies we discussed earlier. For example, Ford. Their performance this week could have ripple effects throughout the entire auto industry.
Right. If they're struggling with EV production or seeing a significant drop in demand, it could be a warning sign for other automakers. But if they exceed expectations, it could boost confidence in the sector as a whole.
The same goes for Alphabet and Microsoft. Their cloud computing businesses are massive, and their results could give us valuable insights into the overall health of the tech sector. And then there's Apple, the consumer tech giant. Their performance is often seen as a barometer for consumer spending, which, as we know, is a major driver of the economy.
Right. So even though we're focusing on individual earnings reports, it's crucial to keep that bigger picture in mind.
Always. Because ultimately, these companies are all interconnected, and their successes and failures can have far-reaching consequences. We've covered a lot of ground here. From individual companies to macroeconomic trends, it's been a whirlwind of information.
Yeah, but hopefully a valuable whirlwind, one that's giving you a better understanding of the forces at play in the market right now.
We've tried to distill the most important insights from experts like Kevin McCormick and Jim Cramer, highlighting the key things to watch for in the coming week.
And we've also emphasized the importance of critical thinking, questioning assumptions, and considering different viewpoints.
Because ultimately, that's how you make informed investment decisions. You don't just blindly follow someone else's advice. You do your own research, you weigh the risks and rewards, and you make choices that align with your own financial goals.
And that brings us to the most important question. What does all this mean for you?
Exactly. We've given you the information. Now it's up to you to apply it.
Right.
So as you watch these earnings reports unfold in the coming days, we encourage you to think critically, ask questions, and draw your own conclusions.
Yes.
Because remember, investing isn't just about following the herd. It's about understanding the landscape, making informed decisions, and charting your own course.
And speaking of charting your own course, we want to leave you with a final thought, something to ponder as you navigate the often choppy waters of the market. We've talked a lot about individual companies and their earnings reports, but there's another layer to consider: the role of innovation.
Oh.
These companies aren't just static entities. They're constantly evolving, developing new products and services, pushing the boundaries of what's possible.
Right.
And sometimes those innovations can be game changers. They can disrupt entire industries, create new markets, and generate incredible wealth for those who invest wisely.
Think about the rise of the internet, the advent of smartphones, the explosion of artificial intelligence. These were all innovations that fundamentally changed the world and created enormous opportunities for investors.
Absolutely.
So as you assess these companies and their earnings potential, we encourage you to also consider their innovation pipelines. What are they working on? What breakthroughs are on the horizon?
Because those are the seeds of future growth. Those are the things that can transform a good company into a great one and potentially generate outsized returns for investors.
And remember, innovation isn't limited to tech companies. It's happening everywhere, in healthcare, in energy, in consumer goods, in every sector imaginable.
So keep your eyes open, stay curious, and never underestimate the power of innovation to shape the future of the market and your own financial success.
It's amazing to think about how much innovation is happening right now,
I know.
how it's going to shape the market in the years to come. I feel like we've barely scratched the surface.
I know, right? It's an exciting time to be an investor. And speaking of excitement, we can't forget about Friday, November 1st.
Oh, right, the day after Halloween.
Mhm.
What's on the earnings calendar for then? I'm hoping for a post-Halloween sugar rush.
Well, it's not exactly a sugar rush, but it is a big one. We've got ExxonMobil, ticker symbol XOM, reporting.
ExxonMobil, the oil giant.
Yes.
Now, that's a company that's been at the center of a lot of conversations lately, especially with the focus on climate change and the transition to renewable energy.
Absolutely. Their earnings report will give us a glimpse into how the energy sector is navigating this complex landscape. It's going to be fascinating to see how they're balancing their traditional oil and gas business with their investments in cleaner energy sources.
You know, it's funny because we started this deep dive talking about Ford and their EV push, and now we're ending with ExxonMobil and their energy transition. It really highlights how interconnected all these industries are.
It's all part of the same story, really, the story of how businesses are adapting to a rapidly changing world.
Right.
And for investors, it's about identifying the companies that are best positioned to thrive in this new environment.
Well said. And I think that's a perfect note to end on. We've covered a lot of ground this week. From individual companies to macroeconomic trends, from electric vehicles to oil giants, from earnings reports to innovation pipelines, it's been a true deep dive into the world of investing.
It has been. And hopefully you, our listener, are walking away with a better understanding of the forces shaping the market and the opportunities that lie ahead.
Exactly. Remember, knowledge is power, especially when it comes to investing. So stay informed, stay curious, and as always, happy investing.